All right. Without any further ado, folks, I'm going to give you guys my vantage point of top 10 winners and losers for 2020. This is by no means an all-inclusive list, and the placement is 100% arbitrary, okay? Meaning I made this up. All right. It's not based on any official ranking scheme. I am going to talk a lot about finance, but there's also things on here that have nothing to do with the stock market as a whole. So understand that as well. It's just a list that I put together that I thought would be fun to discuss. So what I'm going to do first is I'm going to go ahead and run down the top 10 list like most of them do. And I'm just going to give you top 10 highlights, bullet points. Okay, these are each the placement. There's going to be one winner and one loser for every category, or I should say every placement. And then afterwards, we'll open it up to discussion so that everybody can see. We can talk about it in more detail. But first, the list. So we have number 10, top winner for the year was Tesla. Pre-split price, they started at $420 at the beginning of the year. It was $418 to be exact. Post-split, they ended the year at $3,500. That is an ROI of 8 times. All right, 800% for Tesla. This was and is and still is, and I expect for the long-term future to be a meme stock. This is not an indication of their value, but it is what they did for the year. The top loser for 2020 would be CCL. That's Carnival Cruises. They started the year at $50.83. $21.66 was their closing price. That is more than a 50% loss, and they also failed to reopen 3 times this year, and in one of their reopening attempts also had an additional COVID outbreak. So not been a good year for cruise lines. Top winner number 9. This is GM, General Motors. They attempted to do some sort of a partnership with our number 9 loser, Nikola, which Nikola ended up being shown to be a farce. They did not have anything in place in regard to their advertised technologies and capabilities, and have since fallen to the wayside. It was pretty ridiculous. Winner number 8 on my list is the IPO Palantir. Palantir, named for after the Seeing Stones in the Tolkien trilogy, Lord of the Rings, and they came out. They are a information and security technology play. They do a lot, like them. I do a lot. They had a good IPO launch, not as hog wild as a lot of the other IPOs we saw, but that's why they make my winner list, because it's been pretty consistent. Loser, Snow. This was a cloud security and software company. They're a loser because their IPO just went hog wild. They're way overpriced, and they don't have any actual assets. Loser number 7 on the list. I'll tell you why in a second. But loser is AMC, Hertz Rent-A-Car, United Airline, Kodak, Helion. You guys catching a little pattern here? A bunch of companies that either faced bankruptcy, went through bankruptcy, or are at risk of bankruptcy going forward. The losers, number 7 again. So 2 losers for number 7 are the speculators and the pump and dumpers. Every one of those stocks were definitely affected by no way around it, the Wall Street Bets community, and similar communities like that. So that is the loser, 2 losers for number 7. Winner number 6, active trading for 2020. Active trades for the year 2020 were up over 300%. The average annual trades for most brokerage firms, there's a few reports that came out on that, 3 times more traders participating in the market and trading back and forth. Winner number 6 is the buy and hold investors. Most every investor across most investment classes, not all, but especially large index funds, retirement accounts, etc., recovered from the February lows in late October. So anybody who did not freak out about COVID and buy and held also won out. And the overall winner that I'm awarding to number 6 is financial literacy. There are more people searching for information online than I have ever seen throughout my career. And there are a lot of resources and communities out there to try to help with that. Number 5 on the list, winner video game category, is Among Us. This is a game that came out of nowhere. It's been around sitting idle for 3+ years. Nobody played it, and then suddenly a couple of streamers played it, and it became the top 2 or 3, either the number 2 or number 3 place in top games for the year of 2020. Those who don't know, it is basically the board/card game Werewolf, except you're doing it in space. So you're a bunch of people trying to complete tasks, and there is a saboteur among you trying to kill everybody. Pretty simple premise, a lot of fun to play. They did this, it moved so high in popularity even without a native chat client, which makes a huge difference in quality of games that you play. Number 5 loser would be Cyberpunk 2077. I'm sad. Those of you guys who've been hanging out with me for some time know that I spent pretty much my entire holiday vacation playing Cyberpunk 2077. I'm through the game. I like it. It's got so much good for it, but also so much crap. I can surmise it as simply as just kind of giving you a highlight of one side quest that I did. It was to break in and steal information from a super yacht. It looked fantastic outside. It looks sleek. It looked awesome. You get on the ship and there's literally nothing. It is a shell with a walkthrough on the main cabin, and that is it. There's no downstairs, there's no access to the bridge, and nothing outside of just this one little hallway, which is supposed to be the main cabin, has any detail added to it whatsoever. So that's pretty much the summary of Cyberpunk 77. Lots of potential. It looked awesome when you first come up, but on closer review, it's just got so much going wrong with it. Sad. Anyways, number 4 winner, Twitch Finance, has an average estimated daily viewer count over 10,000 in the year 2020. We're still not an official category for Twitch yet. A lot of streamers are, like myself, in just chatting or using a very old game that used to be on like one of the Atari type systems. I don't remember which one specifically, called Stocks and Bonds. But we are a growing community here on Twitch, and it has been fantastic to see the amount of active users going up. Loser, subreddit, Wall Street Bets. Toxic, they're part of the problem. The fact that their very own description says, hey, we are 4chan with a Bloomberg terminal should tell you all you need to know about the group. They are enabling gamblers, and it's been horrible in spite of their exponential growth this year. There's going to be a time that comes when people following that subreddit are going to start to reconcile the problems with their investment strategies, but we'll see how that goes. Winner number 3. We're in the top 3 now. Finally, vaccines and science. We have this year successfully rolled out a vaccine with over a 90% efficacy rating for COVID. A lot of people didn't think that was possible, myself included, but with the help of companies like NVIDIA, processing not only their graphics cards and GPUs, but also their own internal AI systems, we were able to successfully figure out and roll out a highly effective vaccine for the COVID virus. So I think that was pretty amazing to see, and that's a big win for science. It excites me about medical science going forward. I disclaim this all the time in my group. I am not into biology. I suck at it. But it is exciting to see nonetheless, especially as an investor. Loser, anti-knowledge folks and groups, anti-vaxxers and anti-maskers. It's been very clear. Like there've been a lot of debates online, social media, in particular, in different spaces. I will tell you, for my own personal review, but also I do broader like metric reviews as well when I dig into data and information. Yeah, the anti-5Gers. It's funny that they still have a foothold, but that's where most of the anti-vax group is kind of rotated to. But if you just pay attention to the chatter. Long story short, though, social media, not just the companies themselves, but actual users have started to kind of curtail a lot of that push for the anti-vax movement. It was a very dangerous thing for society, and I think that COVID kind of highlighted how dangerous that mindset and behavior actually could be. And there have been things from policy changes, sweeping policy changes in the political landscape, to just the way that people talk about it in public. So I don't mind people having, incorrect beliefs, but keep it quiet and keep it out of the public space, because your viewpoints do have a real impact on the world. And the more negative and harmful those viewpoints are, the more active I feel like communities should be in combating that type of misinformation. So it's been very clear this year. I think there have been big gains just in the social media space. I have not actually been on Parler, but I know that there's a move to other social media echo chambers, is what I'll call them. And anybody who's been on the channel knows I hate them. But echo chambers are kind of becoming more of a thing and less public. So it's not going away. It won't go away, but it is getting quieter for the rest of us, which I'm a fan of. Winner number 2. Bitcoin, crypto in particular. Crypto is greater than precious metals and collectibles. So I know we are seeing early this week a rally in the precious metals markets. Parler's version of retweet or sharing a post is called an echo. Can these people not see what's going on? Anyways, that's for, I said we'd talk about this after the end of the top 10 list. Anyways, precious metals are falling this year. So I have been in finance for 18 years. I am very vocal when it comes to diversification in your portfolio and understanding that diversification tactics across asset classes are not for everyone. If you are an investor and you're an active investor, you should focus your early investing on investing in what you know. Okay. If you've got less than $10,000, you've got less than $100,000, you've got less than $10 million. Those are my thresholds for when you should start considering alternative investment strategies and types. But if you're under specifically the $1 million mark, you don't need asset class diversification. It does not help you. It does not protect you. It is an expensive bet. However, the validity of crypto, the ability to transact upon it, and the increased regulation has made it a much more viable investment. And so I am saying, as of 2020, out with precious metals, gold, silver, etc., and collectibles, and in with the crypto. So that's my statement as a finance professional. Take it for what it is, but that is a winner, number 2. Loser, number 2. Oh, how sad. The US dollar specifically. So with a loss of confidence in the US dollar, the inability to pay taxes, expected concerns when it's going to come to consumer debt, housing, and inflation, I think that US dollar is definitely a loser for the year 2020. And this brings us to the number 1, guys. That is Robinhood, and it gets the award of winner and loser number 1 for 2020. They are a winner for the fact that they have brought and provided access to so many investors to the market for the same reason they are a loser. They have failed to disclaim the fact that they are making arbitrage off of their users' order flow, meaning that you could place an order on Robinhood and it can sit there for an extended period of time and thus be suspect to worse fills because they are sending it to market makers who have a vested interest in getting the worst possible price for the orders that come through because they get to keep the difference. And then winner in the fact that they did bring zero commissions to the stock market a lot faster than a lot of people expected. You've got large firms taking notice and adjusting accordingly. And then again, the fact that they brought so many users access to finance, I am celebrating that more people want to learn about money investing, and I think that they should. I just don't think Robinhood is the platform to do it. They did a great job getting access to a user base, but they do not provide any real support in the aspect of learning. So they get a both winner and loser. But that is my top 10 take for 2020. If you guys have anything specific you would like to throw into the chat that should have been on the list that didn't get covered, let me know. But there you have it. Special mention for me, I am awarding SPACs, special purpose acquisition companies. They've gotten a lot of publicity and notice this year, but I think that not enough people understand how they work, and so there's definitely going to be a lot of people who lose money more than make money on these, I think, long term. But they get special mention, and they're not necessarily listed as a winner or loser, but I would put them kind of in the same category as Robinhood in that aspect as winner and loser. So with that said, I'm going to go ahead and share the top 10 lists. Here's some notes. That's just the outline. I have the notes elsewhere. But there's the top 10 list. If there's anything you want to comment on or want me to elaborate on, let's talk about it. So I hope you had fun. I had fun putting that list together, but it was interesting. It was interesting. All right, let's increase the chat so I can see that. All right. 4K price target. Talk about a great call. Oh, that was for Tesla? Yeah, no, I believe it though. I do. You've been bugging through Cyberpunk. I noticed that when it came through. Yeah, it's weird. If you're on console, don't bother. If you're on PC, make sure it's got some pretty beefy hardware to be able to keep up with it. Cyberpunk's not bad. Rampor, you're bad. Just got here. Can you get a recap of number 8? Yeah, number 8. So winner is Palantir. I put that because it was, in my viewpoint, a successful IPO. They came out at the appropriate price for market. I think that they've got a lot of value going into next year. And the good thing for me is that a lot of people are confused by what Palantir does. And that makes it better investment for me, because they're not as easy to pump and dump. And so they're not dealing with like, outlandish valuations or projections for the following year. There's still going to be some, shakiness in the price for the next month and a half or so. As additional restrictions get removed from shares outstanding. But I think long term, this is a pretty good spot to be in. And then loser is Snow, and that's because they don't have a lot of substance to their business. They came out, a lot of hype. They talk about security for the cloud and software services for the cloud. But the reality is, they're offering a dime a dozen service, and they don't have any real assets to back up their company value. That being said, Palantir's trading in the 20s while Snow is trading in the 200s. So people got excited about Snow because it was easier to grasp from a understanding standpoint. But yeah, no, not that great. Yes, Snow did get Berkshire's attention as well. So it is being held in the Berkshire portfolio. But we talk about this, no matter how smart the investor is, Buffett, me, Ackman, I don't care who you put up there. You following their investments are not as fair from a ratio standpoint. You're not going to have the same risk tolerances that Buffett and his group are going to have. Also, Buffett's not directly or actively managing and leading Berkshire Hathaway for about 2 years now. So he's participating, but he is not the sole decision maker that he used to be. Muffikin, yes, that is a good point. Unless you have a lot of knowledge, don't take a lot of risks. I talk about that very actively, and you do need to understand that even though I put crypto as a winner here, and I think that their transition into a viable investment is there, even if you do have the higher portfolio level that I say that you should be using this type of portfolio diversification, don't invest in what you don't know or don't understand, and definitely don't ever overinvest into a singular asset class just for the sake of reaching diversification models. Yeah, don't do it unless you know. Crypto does come with a lot of additional risks, and I talk about that in my disclaimers at the start of every stream. I should actually start adding, though, crypto as one of the asset classes I say or disclaim for risk. It is riskier than options sometimes. ARK is a winner, combining social media plus investing education. Yes, I am a fan of ARK and what they've done. I'm not following them closely as I'm kind of outside of their target demographic, but I should familiarize myself more as I know a lot of the community is getting information from ARK. So, but I definitely have seen what they do and I like it. Frackspace ordered 1.5 years ago on PS4. So tragic, Frackspace. I did not order pre-early, but I've been following the hype for 2 years at this point. So tragic. Why Riggs? Weren't there some hedge funds that folded due to the crash? Did I consider those? There were, and no, I did not. Listen to this. Hey, thank you so much for the resub. 2 months, 2020. Let's go, gang. You heard it here first. Thank you. Welcome. Listen to this. Good to see you again. But no, specifically regarding Y Rigs, the hedge funds and stuff, I did not put any of those on the winner-loser list because the reality is for you and me, they make little difference. For the economy, they make little difference. Hedge funds are very much siloed in how they affect the overall markets unless they put themselves in a position for high speculation, like in the case of 2008-2009 crash. There were a lot of speculative plays regarding mortgage-backed securities, and that's a part of what kind of led to the crash was the amount of money put into that. There's a lot more restrictions now, and now hedge funds are even more siloed or insulated, I should say, from the broader landscape. So while yes, there were losers and there were people who shut down, I don't think that any of them make a winner and loser list, for me at least, in our community. But that's, like I said, it's completely arbitrary what I put together. Lord Merck, also with the resub for 5 months. Thank you so much for your continued support. It's awesome to have you guys here. You're most welcome, Rampor. I'm glad you made it for the stream. Muffikin says, you use Snow for work. You wouldn't write it off. It's changing how traditional data warehousing is. Yes. And I won't ever write off somebody 100%. Like I've very clearly multiple times this year advocated against GameStop and their position in the market. But I've refused at any point in time to 100% write them off. Yes, they are stuck in the past. Yes, they do have a huge wall of problems in front of them and an inability, from what I've been able to assess, to adapt. But that doesn't mean that they're out. It's not over till the fat lady sings, and Hertz is the only one who really had the song sung on them. So technically shouldn't write off Kodak. or Helion, or Nikola for that matter, even though I'm completely dismissive of all of the above. NYC John, welcome, says you bought Ethereum in 2018 and you're finally positive. Way to hold for the long game, NYC John. Our take here in this group and community is that crypto definitely has some more upside, but the guidance is do not look at that as your primary investment vehicle. If you follow cryptos closely, then by all means actively trade it. However, long hold. Exactly, long hold. There you go. However, if this is just a portion of your portfolio, then it is best to take the buy and hold position in most asset classes, right? If this is a piece of your overall portfolio and it's for diversification purposes, then hold. You don't need to worry about the comings and goings in the day-to-day. AMC looks like it's in a good position for takeover. Yeah, I wanted them to be bought out a year ago. Not a year ago, 6 months ago. I started saying that they'd be a good buyout target. The thing is with AMC, though, they're owned by a Chinese corporation. So information on them is hard to come by, and I don't think that they're necessarily in a position to get out of or unwind the asset. So they're just kind of wait and see. They'll probably file bankruptcy, get some debt restructuring, and maybe open under another name. But we don't have a way to get any insight on what their financial backing looks like because they're owned by a Chinese umbrella corp. So I did have them as a takeover target because of their balance sheet, but I've since removed them because of their ownership structure. So sad. Let's see, am I still logged in? Log out in the URL. Hey, with that, I might as well take this opportunity. If you have a financial account anywhere, my guidance to you is get two-factor or multi-factor authentication. I know for a fact that it's not as secure on your mobile device, but two-factor authentication is definitely more secure than any other form of protection out there, including LastPass, because of the fact that most of us, you, me, and everybody else in the U.S., 80% plus in the year 2016 of U.S. residents had their data sold online multiple times over. So with that, just understand your information is out there. It's accessible. This includes your name, your social security number, your past accounts, login IDs, passwords, yada, yada. So get two-factor authentication to protect your financial accounts and any game that you like. VeriSign offers some. You've got Authy. There's a list of them. Call your financial institution, ask them which authentication method they use, and get it. It is free. It costs you nothing, so do it. And not sponsored, by the way. All right, while I'm logging back in, Y-Riggs said probably every stock you sold at a loss in 2020 you should held. What? Yeah, that's true. I mean, it's honest to goodness. This is why I put it on my winner loser list as kind of both winners. If you buy and hold and if you trade actively, there were room for both to get major wins this year. Okay, I focused on swing trading myself, and that swing trade focus allowed me to pull a 33% gain for the year on real money, with almost or perceivably lower risk. Okay, I'm not going to say no risk because there's too many people who are going to try to copy me. but it was exponentially lower risk than most other people took or allowed themselves for in 2020. So I'm able to rest easy on that. It was overall very passive in how I invested. I mean, you guys were a part of it. My hypothetical portfolio, what are we sitting at? That is 34 trades in the hypothetical. My real portfolio, where I had actual cash, is probably sitting at about 12 trades total. I'll tally that up probably today. I've got some statements to get out to the investors. So, but yeah, I'm sitting at 12 or so, a dozen or so trades. And most of them, not all, but most were cash secured puts. So relatively low exposure to the market, and very good returns, I felt like. So that is me. That is my journey. I understand that is not going to be indicative or the case for everyone. But active trading worked for most people this year, not all. I know there were a lot of losers, but so did the buy and hold. Because again, asset classes, everybody was like, oh, the end of the world in February. I knew for a fact that was not going to be true, which is why I launched my channel in February to kind of get out there and help bring some stability back to the market, and hopefully a little bit more thought behind the positions people take, because there's also a lot of speculation that I wanted to combat. Just because stocks are going up does not mean all stocks will always go up. And that seems to be a mantra of so many people this year, and it's just driving me nuts. Anyways, AMC. So here's the thing. We found all the way here at the bottom. This is their official site. You don't need to know where I'm at. Leave me alone. Come on. Oh, because Firefox is... Thank y'all. There we go. The Wanda Group here. So this is who owns AMC. It's not just who owns the website, but this is a Chinese-based company. Don't know enough about the Wanda Group. I'm not going to dig into them, but this is the reason why I took them off of my potential takeover list. It's not ruling it out completely, because honestly, if they want out of the business, they could. But based on the fact that they focus on this is one of their investment type pillars, I don't think that they're likely to want to sell off all of the AMC assets. A bankruptcy restructuring would be far more favorable to a group like this than a sell-off. Unless, of course, like I said, they want to get out of the biz. But I just don't think that. So that's why I logged into Schwab there. All right. Kim says, you think we might have missed the two largest losers of 2020, fixed income and big oil. Negative real returns on bonds across the board for the first time ever, and oil demand peak even went negative. That is a fantastic call out, Kim. Both deserve a losing spot on my list somewhere. First off, fixed income, I'd probably pair that and bonds. Yeah, that's fixed income, bonds. Anyways, I'd pair fixed income specifically with the US dollar decline. They fall into very much the same boat, and the devaluation of the dollar is really based or tied to interest rates, and that's why fixed income has been a real problem. And then the other one is oil. Yeah, oil had a dip in, what was it, May? Yeah, I think it was May, June, where it actually went negative. And I personally have traded the swing trade for energy and oil 4 out of the last 6 years, and I won't touch it this year at all. And the reason is because it's just so out of whack. Production's off, storage was having problems. People, like you pointed out, were selling or paying, I should say, to take delivery for oil, and it was absolutely bonkers. So oil, I do think, is going to have some sort of a resurgence, but we're definitely, and I need to emphasize this, we're not getting back to the 2019, 2016 travel seasons. It's just not going back to that level for travel anytime soon. I don't think we're going to see those levels in travel, and that lowers oil consumption significantly. I think it makes up about a fifth of the overall oil consumption market. Muffikin, you picked up Longview at 18 today. Hope it goes well. Is Longview? I've not done a review on them. Longview. Oops. Probably should have clicked the button that it tried to give me. Longview acquisition. Okay. So this is a SPAC, Muffikin. So I have a new SPAC disclaimer as well. So what you need to know on Longview is the problem is for special acquisition companies. If you do not invest at the $10 mark, that is their initial offering, then you're paying too much. Pure and simple. Okay. The way that SPACs work is you are paying a manager $10 per share to go out and make an acquisition. Everybody who gets into the SPAC after that initial pop is paying too much. Or I'm sorry, after the initial offering is paying too much. And the reason is because no matter what happens, no matter who they announce that they're taking over or what business they decide to merge or acquire, they're still only worth that initial $10 a share. More money did not magically just show up because of the fact that they finally identified their acquisition. So understand that with all SPACs, the guidance is buy it at 10, do not buy after they announce their acquisition. So, yes, there's a possibility it will go up. We've seen SPACs go as high as $65 a share this year. Well, last year now. So, yes, it could go up, but that is pure speculation. It has nothing to do with actual values. So, hopefully that helps in the future, Muffikin. My guidance would be to kind of close this position and wait. But it's your money, it's your portfolio, it's your investment. I understand if you want to hold. Commercial real estate. Yes, that is a loser. The reason it's not on the list is while we did have a very high level of foreclosures and a lot of missed payments in the commercial real estate market, a lot of them came with riders or expectations that they would be recouped this year or the year after. As well as the amount of stimulus that was offered, a significant amount of that went towards late or delinquent real estate payments. So it's not a problem yet, but we're definitely seeing major cracks in the sector. That brings to mind, though, that I did want to add another warning flag. I couldn't necessarily put this on winners or losers, but that is real estate pricing in general. This year here in Phoenix, we topped the nation for increase in real estate values. Some markets within Phoenix pushing 12% increase for the year, and that's ridiculous when you think about real estate. So be cautious there in real estate. It is a real issue. And then another loser that came to mind was small businesses, and winner was billionaires, but I just didn't want to give that story a lot of space because it sucks that so many small businesses closed while we've seen multiple billionaires get much richer if you look at the Forbes list. So that should have been on the list as well. I took it off because it literally just that few sentences right there has already soured my mood. So, but that was also on my list. Filthy Cash, you're 200 pages into the Intelligent Investors. It's crazy that a bond-heavy portfolio used to be a smart play. It will be again, Filthy Cash. Okay, once interest rates rise, if we get a nominal yield over, I'd say 3.5%, that is the point at which I would start really eyeballing fixed income again. To put that in perspective, I'm telling you guys to get excited about a 3.5% dividend payout. That's when you should start paying attention just from a stock portfolio perspective. There's a lot of other opportunities out there, but really it starts to get kind of shady, and you're concerned about risk over the 4.5% mark. But if you think about it, that's not a very good return on the amount of risk you're taking to invest. a 3.5% dividend for an equity is just not. It's not something that should have ever historically been considered exciting, but that is the 2020 we live in, and so that is the realistic expectation that I'm giving for guidance. But yeah, no, I totally agree, Filthy Cash. Bond heavy portfolio used to be the way to go. It is currently not, but that doesn't mean we won't return back to normal. Why rigs? Oil is so hard to hold when it goes down. Who knows if this is it, if it'll ever come back up. I will tell you why rigs, oil's not going anywhere. There's going to be significant moves to curtail our dependence on oil. But even so, that adjustment, okay, a lot of people don't realize that oil processing is still used in more than just raw fuel. Okay, you've got the plastics market. You've got a lot of other uses in energy that is not specifically combustion engines or jet engines. So it's not only that in terms of what's used for oil. So it's not going anywhere. Even though we expect demand to decrease, it is not completely being ruled out. Lord Mark, 2 to 3 years after we are confident in the vaccine, working long-term for travel to try to get to where it was. I think that's a fair assessment, Lord Mark. 2 to 3 years. I would accept that time frame for anybody projecting out. I might even say that at the 3-year mark, we might even surpass previous travel records. But this year, not happening. One more 2020 winter, The Mandalorian season finale. I missed it. I have not watched it yet. It's on my list though. It's definitely up there. I've seen a few spoilers, so don't worry about it. I've already kind of missed that surprise, but okay, yeah, I'll give that a 2020 win right there. But now you got to give me a show that lost this year. You know what lost this year? Talent shows. While I loved the adjustments made for AGT and whatnot, all of the other talent shows just really sucked. So talent shows, those are the losers for 2020. Sports, if you're into sports, they definitely lost a lot. They had outbreaks even in insulated pockets, so that was rough. And then of course losing all of the live fans. Not huge into sports myself, but I know a lot of people like it. Olympics, they got canceled this year. That's another loser. Muffikin, you picked up a long view cash secured put. Your cost is set to be about 15. Plan on holding long after merger. Bill Gates and Kathy hopefully don't fail you. That is actually relatively okay, Muffikin. I'm sure you've been around long enough. I don't hate a SPAC at $15, just so long as you're fully aware that you're paying a 50% premium to participate at that point. But that is like my absolute cap limit. So the fact that your cost basis is 15, good on you. Congrats. Lord Mark, as the U.S. curtails their dependency in China, will buy up any slack in the oil for the near term. Yeah. Because China's got a huge push on energy use and manufacturing, etc. To combat the U.S. trade war, they have drastically increased production to other countries. See, that's me playing Cyberpunk too long. The world's not owned and run by governments anymore. It's run by corpos. China Corp. All right, guys. That is it. That's our 2020 top 10 list.